So hi everybody, welcome to our Governance Made Easy webinar today titled AML CFT Responsibilities of Boards and Senior Management. We have special guests with us today, Tiana Masur and Daniel Ralph of AML Solutions in New Zealand, and Independent Director and Investor Nigel Scott. Welcome to you all.
Thank you.
Thank you.
My name's Sean McDonald, and I'll be your moderator for the next 40 odd minutes. And first and foremost, thanks for attending today. I know it's a Friday. We appreciate the effort you've made to be here for our live webinar event. During the session, if you have any questions for our panelists, and we hope you do, please use the Q&A button on your toolbar. We'll be answering these throughout the session, and we'll try and get through as many as we have time for. Finally, if you stay through till the end, which we hope you will do, and as is customary for our webinars, we have a special treat for you. By answering the really short 1-minute survey at the end of the webinar, you'll go in the draw to our beautiful gift hamper worth over $400. Now, for those who are a little bit unaware of BoardPro, we are a board software provider, sometimes called a board portal. And we serve around 25,000 users around the world in around about 17 different countries. We enable organizations to prepare for and run their board meetings more efficiently and effectively with, you guessed it, clever software, with less time, and deliver more impact and value for the organization. And as much as we are a software provider or board software provider, part of our wider mission is to make the fundamentals of governance free and easy to implement for all organizations, especially those with resource constraints. And our webinars that we put on each week are a great example of how we do that. So let me now hand over to the team to introduce themselves, starting with Tiana first. Over to you.
Great. Thank you so much. Sean and Nigel, thank you so much for having us. So my name is Tiana. I'm Head of Delivery here at AML Solutions. And it is quite a telling story of how long I've been at AML Solutions, using that photo in the main slide. I've been here for 10 years now. I'm a chartered accountant and a CAM certified expert in AML CFT. I come from a CA background, chartered accountant, and did financial statement audits for a long time. So I've been in the audit world for a very long time and now very much focused on AML. Thank you.
Daniel, over to you. Thanks, Tiana.
Thanks, Tiana. Thanks, Sean. Yes, my name is Daniel Ralph. I'm Chief Strategy Officer at AML Solutions and AML Hub. Not working as long as Tiana in AML, but for over 5 years, I've led various businesses that have supported reporting entities across the financial services, legal, accounting, real estate sectors, just in fulfilling the AML obligations, both in Australia and in New Zealand. During this webinar, I'll just be facilitating the discussion, so the practical insights and actual next steps are provided to those who are listening to this webinar. Over to you, Nigel.
Yeah, thanks, Daniel. So, hi, everybody. Look, thanks for attending. So I'm a professional director. I currently sit on 5 commercial boards and a charitable board, including the board of BoardPro in that commercial context. Several of the boards that I am on the board of are heavily involved and have to comply with AML and CFT. My background is actually in banking and then wealth management for about sort of the last 15 years. So I've been donkey deep in the alphabet soup of regulation. So both from a management and also from a board perspective. So hopefully I can bring some of those insights to what we're going to talk about today. Thanks.
Thanks, Nigel. Okay, Tiana, I shall hand over to you if you want to share your screen.
Thank you very much.
Alrighty.
Great. So thank you so much all for joining us today. I am from AML Solutions, and it's a bit of an introduction, not so much about representing who AML Solutions are, but also to understand where we're coming from and our views on some of the technical matters we'll be talking about today. I think it's also important to know what our expertise are. So we only do AML at AML Solutions, as the name would suggest. And we are a real technical team that focuses on AML. So our backgrounds are typically from the Big Four, ex-auditors, lawyers, chartered accountants, etc. We've been operating now for over 10 years. We've assisted over 2,000 reporting entities from an audit or risk consulting perspective. And we also host a conference every year, which is really exciting. So we work across Australia, New Zealand, and the Pacific Islands. And it's so great to see today that not only do we have New Zealanders, some locals we saw from Newmarket as well, but also across the Tasman. So this is an exciting piece of legislation, obviously, for tranche 2, as in like the lawyers and accountants coming in, being captured potentially in Australia as well. So we'll touch on that topic a little bit today too. So today's session is all about what does the board actually need to know about AML CFT. It's a very operational piece of legislation, but at a very senior level, what do you need to be aware of? Okay. And I think the greatest starting point when we talk about AML is to really bring it back to basics. So it always goes back to the fundamental pieces of how does money laundering happen, okay? And every organization will have different susceptibility to the 3 stages of money laundering, which really are placement, layering, and integration. So placement is all about getting dirty criminal cash into the financial system. Layering is all about creating that clean audit trail, right? No longer making the money appear very illegitimate. And then finally integration, which is the funds are now clean and criminals can enjoy their funds. So essentially legitimizing the funds they have and enabling them to benefit from the criminal activity they've undertaken. So one of the ways that we see this very much introduced is we see this working across sectors. And an example of that, how that might operate really is if we take something as simple as a conveyancing transaction. If I had $100,000 perhaps in dirty cash, I don't know what to do with it. The easiest way to launder those funds would be through a property transaction. So I'd purchase a property, perhaps in South Auckland, worth $700,000. I'd purchase that with legitimate funds, but I'd use my $100,000 in cash to then do the property up. Okay, so suddenly my property is now worth well over the $700,000, perhaps $900,000 in an open market. Okay, and I've gotten rid of my cash. That's a placement stage. Okay, the layering can be utilized in many different ways. I could simply list the property with a normal real estate agent, but instead of selling in normal terms, I might get Daniel, my co-associate in our methering, for example, to come to my auction and pay $1 million for my $900,000 property. That means we're transferring value between each other. He no longer has to supply me with cash in the future. Where we transferred value between ourselves. I now then can start utilizing other providers like an accountancy firm or a lawyer to legitimize the conveyancing, right? So I might get some set of financial statements which show a great profit being generated from the sale of this property. I'd also have sale and purchase agreements as well, starting to legitimize those funds. Okay, I might do that a few times over, start a company, get some financial statements, and then the integration stages can start. Using those financial statements, I can purchase vehicles, get financing, work with stockbrokers, shares, platform providers, etc., and legitimize where my wealth has come from using these financial statements. So we can see that typically all money laundering happens across multiple stages and levels. And we can really see that different types of sectors, whether you work in the financial services sector, in the professional service sector, can also play a role in legitimizing those funds. There's also been a number of fair warnings under this AML CFT legislation. Okay, it is a very tricky piece of legislation to implement, and a number of really great organizations appear on some of the recent formal warnings that have happened in this space. Okay, so everyone from large entities like a Westpac and TSB very much appear on this list, as well as sort of smaller entities as well. Okay, so it certainly shows that no one's immune to non-compliance with AML CFT. This doesn't in any way reflect a poor culture or anything like that, or a non-willingness to comply, but instead simply that AML is really tough. It's a risk-based piece of legislation, and many have been caught out by it, unfortunately.
So Tiana, just jumping in here, this is very New Zealand centric here. How does this, for Australian audience that are dialing in here, how does that compare against Austrac and some of their public warnings?
Yeah, no, absolutely. So we've been pretty lucky in New Zealand as a reporting entity so far. It very much from the test case with Sky City, it kind of is starting to show now that our penalties are limited to 8 million. And we'll go through that in a bit more detail shortly. But our penalties have really ranged from anywhere as low as 345,000 up to the highest and just over 5 million. When we compare that to Austrac, they work on a very different model. Rather than specific penalties, they have multipliers that are related to breaches. And that's when we start seeing some of those very, very large, hefty fines. The biggest being 1.3 billion for Westpac, 75 million for Sky City, Adelaide, for example, etc. So there certainly are those very hefty fines that are in Austrac, and we've been very lucky in New Zealand that the fines are quite restricted. This is just a personal view and where I think the world is going. It's based on no reality or inside information, but I do believe as part of the updates that are expected to the legislation, I don't see why we wouldn't move to a slightly more Austrac-like model, meaning the implications of non-compliance from a warnings perspective and a penalty perspective will certainly increase, I think, in time. And it's a really tough piece of legislation as well, because it kind of falls under the same umbrellas like the health and safety laws and morals type pieces of compliance where insurance and liability is also in question. So the exciting sort of thing that's happening in the moment in this sort of space is Australian Westpac is currently filed a lawsuit against its insurers to try and recover some of the costs of that $1.3 billion fine because they weren't able to place reliance on them immediately. So it's a really interesting space on how far liability and insurance can also extend to these penalties. All right, so looking into a bit of an inside one, New Zealand Sky City Casinos has recently come to an agreement with DIA, their supervisor, so Department of Internal Affairs, for 4.16 million for the penalty, and that related to a failure to implement a risk assessment program, enhanced ED, so the source of wealth, source of funds verification, and terminating business relationships where the act couldn't be complied with for those customers. Okay, and we compare that directly to the Austrac fine, which was 75 million. Okay, so we can see the very much that different approach that we have between New Zealand and Australia, and the Australians in the room definitely have a little bit more to lose when it comes to the penalties at the moment. I do always bring up the casino cases just because they're so interesting, but some of the allegations from the Australian side have included that dirty money that appeared to have been buried, so literally covered in dirt, had been exchanged for chips, okay? And probably my favorite, which makes me certainly want to improve my driving skills if it is a legitimate funds, was a truck driver in Australia who gambled $44 million over a 5-year period with no questions being asked about their source of wealth, source of funds. Okay, so there's certainly some exciting stories coming out of this casino examples, and people go, oh, that's just woeful non-compliance. It really isn't. It really isn't. What it shows is the challenges of AML, okay? It is deeply extensive, and when a large organization like a casino, getting some of those messages across is really difficult. So the same people who probably received the dirty buried money are also used to receiving crumpled money, money that has been sitting in people's wallets for a long time, money with drinks spilt on it, etc., that would be consistent with a casino. And their job is to stack and treat the money in a way that it can be stored in a safe, and they just carried on doing what they're supposed to be doing, really. The way of identifying customers so easy at a bank. You can't open a bank account without providing AML CFT information. In a casino, you can transact until $6,000 prior to having to do any AML CFT compliance on a customer, right? So how do you track a very vanilla individual like myself, average height, average weight, brown hair, coming through the casino, and when do I meet my threshold? So their ability to comply with a special legislation is naturally really, really tough. Okay, so it just reflects how challenging this piece of legislation is and how some really great organizations are being affected directly by it. This piece of legislation has a really, really large impact, not only to organizations at a penalty level, but it has an overall impact as well. And here we have a graph that's been taken from Aon's reputation crisis database. And it shows the AML impact of Westpac, and it's looking at shareholder value overall. And we see what's happened in the 250 days following the AML allegations being sort of released. And we see that really significant drop, nearly reaching sort of 30% there. And imagine that impact and what that's done. So it certainly is something that goes beyond just penalties. There are certainly wider impacts. So going into some of these penalties, look, legislation in New Zealand is quite prescriptive. There are some of the softer breaches under Section 78, and those are slightly smaller than they are for the sort of more obvious breaches. What I mean by that is that they naturally follow suit. So the bigger breaches under Section 91, 97 have higher values associated with them. In the case of this piece of legislation, it has both individual or civil liability, okay, for directors and senior management and the AML Co. Okay, it also has the body corporate, which is the reporting entity of the financial institution itself. So depending on the level of breach, these can range anywhere between $100,000, okay, and a $300,000 fine individually. That's what the board or senior management would be liable for. And the reporting entity itself, it ranges between $1 million and $5 million. There's also an imprisonment of no more than 2 years associated with the Section 91 to 97 breaches. Okay, the Section 91 to 97 breaches, they're really, really tough to actually not be able to breach. They are a requirement to report any suspicious or unusual transactions occurring, and you've only got 3 working days to do that in New Zealand. Okay, it is actually quite a tough piece of legislation to comply with, and considering that the penalties that are associated with it, it's quite significant, isn't it, really?
Tiana, those are the financial benefits. Maybe I'll flip over to Nigel, being on the board of a couple of reporting entities there. Maybe you can talk to some of the non-financial impacts of a reporting entity and how you mitigate that.
Yeah, like it's interesting because your financial penalties are kind of the end of a reasonably long process, right? There'll be a fair bit of dialogue leading up to that point and interaction with whichever the regulator is. And when you have to remedy something along these lines, it's the impact on your staff, your business, usually quite a high degree of remediation. And you've seen that particularly with some of the banks or the financial institutions when they haven't been doing something, what you have to go back and retrospectively do with your customers. And they can go, well, actually, I've been a customer with you for 5 years or 10 years, you know who I am, but oh, we need your ID again, we need to verify your source of wealth. You're literally treating them like you don't know them. And some customers can actually take offense at that. And it's not easy for staff to sit in the middle and have to ask for that sort of thing as well. So it can have quite a long-lasting and a negative impact on the business when you're remediating something through this process. And with respect to penalties, once again, these are kind of the final outcomes. But the regulator won't just come and go, okay, you've been a bit naughty, you've been a bit lax, here's a fine. They'll want to know what your remediation is. You could have to get consultants involved. You could have to have compliance officers, embedded within your business. So, they're not kind of penalties as we're talking about here, but there are requirements which have a financial cost to them and an impact on the business. And sort of seeing some of this through the industry, it just forces the board and the management to look internally, which means you're not thinking about your customers, you're not growing your business or your market. It can be a major distraction. And so the key thing to mitigate that is to get it right up front.
Yeah. Thanks, Nigel. We also sort of touched on, we're seeing in the media, just the reputational risks associated with getting this wrong. Can you talk to that and how to mitigate that?
So say that again.
Just the reputational risks involved in the business, and also professional risks as well, personally.
Yeah, there is, right? So if you think about someone like a Sky City, for example, right, and what they've kind of been through, and then the stories start to emerge. Well, you got people, truck drivers coming in, and they're laundering all this money and all that. From an investment perspective, we can have clients that will then walk in and go, I don't want to own that stock anymore in my portfolio, right? Now, that's not an impact that Sky City would actually see, but that actually legitimately does go on. People go, I don't want to invest my KiwiSaver funds particularly into companies like that, and they start to ask those sorts of questions, and they essentially vote with their feet. And reputations are hard won and very easily lost, right? Because some of these things that come out, like these bigger cases, they've gone on for a number of years. And then people start to look and go, well, one, do I want to work in a place like that? Do I want to deal with a place like that? Is this how the board and management, is that the culture inside the firm? So they start to ask questions, and you've now given them a legitimate reason to ask those questions. And it's a long way back for some of those companies.
We have a question in from Alan. this is for you, I think, Daniel. Are there any historic examples of personal liability saved flag actions from Austrac versus the star directors?
I can speak to this if you want me to, Daniel.
Yeah, go, Diana.
Yeah, no, so it's really, really interesting. One of the first cases where we've seen this go really, truly beyond where there hasn't been active money laundering within an organization has been ASIC pursuing the star casino directors under their failed liabilities to make sure that AML CFT compliance occurred. So that is a first example from that. That's still ongoing. We also see very active, almost career detrimenting activities happening after this. So if you, and I'm not going to name any names, but if you look in the New Zealand media, you can see multiple examples where directors have been asked to step down of new boards once it was confirmed or publicly released that as part of their board tenure, they were involved in a scandal, an AML CFT scandal. So certainly this is very career limiting, and there is indications that going beyond not these penalties, but really it's pursuing that individually is something that might go on. And it certainly has been the case with ASIC. So it is a very interesting space, and we're obviously always watching it. The results of the star case haven't been revealed, but it is an interesting space, and we'll certainly see more and more as both Austrac and our New Zealand supervisors get more and more pressure from FATF.
Yeah, like I can tell you now, as a director of these sorts of entities, you very much approach the stuff on the basis that the regulator could come after you personally, right? And it could be the end of your governance career and a whole bunch of other things. So, you certainly look at it through that lens and take this sort of thing, really seriously. And to get it right and to do the right thing is actually not that hard, right? It does appear complex and a bit daunting, but it genuinely doesn't have to be.
No, I really very much agree with Nigel. So while it is a risk-based piece of legislation, it's not well-drafted legislation in all cases and is quite challenging to implement at times. It's also a piece of legislation that, with training, some good culture, really embracing it, also can be business as usual, and it's just part of what you do now. Okay, and having that tone from the top seeping down to staff, it really does make a huge, huge impact on how well you're going to be able to comply with legislation.
Just another question, seeing as we've touched on it there about penalties. Can you insure against these things? Obviously, you can't insure against, the risk of a company going down or anything like that there, or having an impact to their business model there. But what can you do in terms of insuring against this?
Yeah, no, so at the very sort of beginning, I sort of mentioned that it's a challenging piece about insurance at the moment in this space. With Westpac, Australia, we see that they've taken Chubb, I believe, as their broker, and they've taken, legal action against them in relation to about 400 million in relation to the $1.3 billion fine of what they perceive to be liability cover. Their insurance provider has declined their claim currently. They don't believe it meets the criteria. So there'll be an interesting space to where it goes. Speaking to just friends and colleagues that are working in the insurance space, and in the insurer's view, while you can certainly insure for the legal costs as part of this, the actual penalties and so forth can't be insured, and certainly no one's providing insurance against the 2-year imprisonment penalty. So yeah, it's not a piece, it's not an area of insurance that you can place good comfort in at the moment, certainly.
No, not an area I'd want to test, that's for sure.
Yeah, so it is very much a test case, and I'm really interested in seeing what happens with the Westpac lawsuit.
We have another question in from Vic. I'm not sure who this is directed to, so I'll just put it to all three of you. Vic says, I'd appreciate some details of how the organisation became aware of it happening, especially which capacity. If, for example, the CFO would become aware, and how directors should be able to detect it at an early stage.
I'll take that one if that's all right. I've got
All
a number of slides that are just going to go straight into that. So the last couple of slides are all about how do you figure out that you are non-compliant, what resources you have, what you should be being reported to on this. And so it's one of those big, long-winded questions, I think, better answered by some of the rest of the presentation that's coming up.
Thanks, Tiana.
That's great insight to sort of see where we're going. It's really, really good. So should we carry on? Yeah? If there's no other questions, great, team. So what are some of the obligations that you're required to comply with to avoid the messy penalties and all of the rest of that comes with? Okay. And we train on all these topics, and each of them is a 4-hour training course. So I won't go into the details of them, but the overarching obligations under this legislation is that you have to have an appointment of a compliance officer, and this person is deemed to be a senior manager under the legislation and kind of treated like the board. So they're one of the individuals that are liable for those penalties as well. As part of their role, they need to implement a risk assessment. So that's really assessing how does your particular entity, how are they faced or impacted by potential money laundering and counterterrorism financing. And then to manage that risk, a compliance program is created. And the compliance program goes through a number of mandated areas such as training, vetting, customer due diligence, account and transaction monitoring, reporting through to FIU, and monitoring, managing compliance. It's all about assurance and knowing how well you're actually complying with the legislation. Okay. And each of those topics is its own right, we could talk about for hours. And as board members, while you need to be across them, you need to be aware that we need to get certain IDs and documents for customers. What those actually are, you don't need to be across. What you do need to be across is that each of those topics actually takes really significant time. So the training commitments, for example, as an auditor, what we are looking for, and we've audited over 1,000 reporting entities, we need to see about annual training. Certainly for all staff with AML CFT duties, the maintenance of a training register, having really great training resources, typically outsourced, because we're just finding that the industry-based ones or in-house based ones are simply just not hitting the mark from a supervisory perspective. And your AML co and yourselves as the board really need to be trained on a very regular and far greater level as well. So even just that one tiny aspect of legislation takes a huge amount of time and also takes resource and commitment, okay? And so I think it's from a board perspective, what you need to be aware of is this is not a one-trick pony where we just get IDs. There's a whole raft of things. So we're changing our HR policy of how we vet and employ staff, how we monitor internal audits affected, etc. There's quite wide spanning really obligations in this piece of legislation. There's also monitoring of this by your supervisors, and that's through the annual report, which you are required to file. It's coming up 31st of August this year, issued soon. So that's something your AML co will be busy doing. And you also have an audit, which is undertaken every 3 years in New Zealand. Australia, it's kind of got the regular review. I imagine that's something that's going to be more mandated potentially in the future with some certain changes. But certainly there is constant and regular monitoring of how you are complying, whether through it's the self-reporting in the annual report or also the independent review that's required every 3 years as well. Okay, so there's quite a few obligations here, and some of them are a bit more challenging to implement in an organization than others.
Yeah, look, from a board perspective, where we start, which is kind of a layer above what we're talking about now, is an obligations register, right? And then the board's aware of, because it's not just AML CFT, there'll be other legislation that, each company, depending on what industry you're in, health and safety and other bits and pieces. And if you start with an obligations register, it gives you the high level of these are the things that we've got to comply with. And then you're simply layering down and you get to this quite detailed slide that we're looking at here. But an obligations register at the board level in the first instance will lead you down this path. And every board should have something like that.
No, absolutely. And it's something that as auditors, we actually are auditing for. We're looking at, is the board aware of the AML CFT legislation? But not only are they aware, what do they know? Do they understand the key obligations at a high level? And how do they know that those are being met within their organization? So it's also the how do you know question that's always being asked. Okay.
That's actually a good question for Nigel. So how do you as a leader, a board member there, drive that culture of compliance?
Yeah, look, you've got to lead from the front, right? It's not something. I mean, look, we'll get into outsourcing and things later on, so I'll touch on that more then. But essentially, like any governance, it all starts with the board. So the boards that I'm on, even though a bunch of us are familiar because we've been doing this for years and years, we still go and do AML training, right? And there's some really slick online modules that you can do that aren't intrusive, and they give you the basic understandings of the things that we're talking about here. But each board director should be doing that because you have to prove it to your staff that, hey, we take this seriously as well, and they should, because ultimately they're on the hook, right? But you do want to lead by example, and then that makes you aware of the obligations, and as I say, into your obligations register. And then it's about that regular cadence of reporting. And particularly when you're starting out with a program, you're never going to get to nirvana, straight away. It's a process to get all this sort of stuff in place. So it's about regular reporting from your compliance officer up to the board. You need to have a mechanism for whistleblowing or for things to get elevated. Some of the businesses I'm involved in, they'll have a separate risk committee to look at this, and once or twice a year I'll actually go and sit on it, right? Just to hear what's going on in the conversation. And then for something like that, I'll always insist that the minutes of those risk committee make their way to the main board. So the board's at least got an overview of what's going on. But you've got to be really cognizant of those reporting dates and what's in them and what they're highlighting. And if you get an external firm like in AML Solutions and they come out with findings, you've got to have a mechanism for reporting on those and making sure that they get ticked off. Because it's not enough just to go, oh yeah, we kind of found this thing, we're kind of working on it over there, and we'll get a follow-up report in 6 or 12 months' time. You've got to be a bit more on the money than that.
Yeah, no, absolutely. And as a board, you need to be aware of what's going on. So getting across each of those obligations, getting a quick update of, hey, what are we doing? Have we had any misadventures in the reporting section? Have we missed any STRs? Those are the big run heaps or breaches. Where are we sitting is so important. And it really shows that you are across what the organization is doing. And certainly reporting and regular updates on that AML CFT audit are really, really important. So before we get to any penalties or any fines, there's a huge process, as Nigel talked about, right? So there is that audit that indicates that things aren't going quite well. Then there is potentially supervisory visits, on-site testing, formal warnings that are private, and it just keeps escalating from there. And so really staying on top of that, managing that actively, having a very clear project against this, which you measure progress, is really the best way of how you communicate to not only internally, but how you're going to manage this sort of breach, but also externally to anyone who does, all the stakeholders from the supervisors, auditors, etc., how you're managing and how you're improving compliance throughout, which is the ultimate goal.
Yeah, I'll just make an observation on that. An audit is nothing to be feared, right? A lot of people do fear it. It shouldn't be. It's just helping you to run a better business. And in my experience, when you've had trouble and you've got, things going on with regulators, if you can demonstrate that, hey, look, the world's not perfect. We've had an audit. We're trying to resolve all these things, and you're constructively going about it, then they'll actually work with you. The ones where I've seen where they've taken really extreme action is because they're getting no buy-in from the management or the board of the company that they're investigating, and eventually their patience runs out. But in my experience, if you're constructively working towards something, then that goes a long way to where you end up, whether it's a fine or a penalty or a warning letter or whatever it happens to be.
Yeah, no, absolutely. It's just that active commitment really they're wanting to see.
Yeah, that's a good way to put it. Yeah.
Yeah, perfect. I think I might come back to the slide if that's okay, because I think we're in a really great role when it comes to audit and what that sort of looks like. And I think giving a bit of a shift and coming back, I think would be a really good idea. But we're talking about audit and what it can do. And thank you for saying that audit is nothing to be feared, because that's certainly what we want to convey when we're doing an audit. We want to bring in some value, help organizations comply, and really bring in some value from how can you do things more effectively, more efficiently, and more cost effectively. So you can really get back to focusing on not instead compliance, but operating your business in a really meaningful way. Okay. So when you are looking for a provider in the AML CFT space, there's actually kind of 3 skill sets that you should be looking for. One is some audit experience. Okay. So getting an expert in AML CFT is great. An audit skill set is entirely different. And being able to apply judgments, really understand where the key weaknesses of a process and design are really incredibly important as well. And you need to have a person who understands your sector, particularly if you work in a boutique sector like a casino, or you're in a new and emerging sector like legal professional, etc., where there's just not enough expertise in that space. So someone who really can understand your sector, can apply audit expertise, and then also knows AML CFT. So make sure you're ticking the box of all 3. Okay. Check the robustness of the audit methodology. Look at their sample sizes. Are they really being effective? Are they testing across all the key obligations that that are required? And are they producing reports that actually mean something? Getting an opinion on a risk-based piece of legislation like you'd be used to from a financial statement audit where it's going concern, non-going concern, it's not really relevant. This one is more about, hey, the design of this is slightly flawed. Let's tweak that. Let's make it more efficient. What does the guidance and interpretation say? How do we line that up? So really look to get lots of value out of your auditor. And make sure your auditor is engaged with you throughout the audit process. There should be no surprises in your audit report, and it should be something that you can comment on, present what your plan of action is going to be, and really add in your management responses. And I think that's what Nigel was alluding to before, which is be across that audit, be able to comment on it, what your plan of action is, and really embed it as part of what you're doing ultimately.
Yeah, and look, I'd add another perspective to that from the board. And to me, it's about that auditor and assurance provider understanding the context of your business, right? And I've worked with some of these providers before where whatever we've been served up has virtually been unworkable, too complex, too hard. Staff haven't bought into it. It's a real challenge and you waste a lot of time and money. So it's understanding where your business is at, what your resources are, and working with you, because to me, when you're starting out down this route, like I said before, you're not going to get to nirvana on day one. So it's a bit of a long-term journey, right? And it's having a provider that can actually go, yep, okay, we kind of get where you're at, and we'll bite this off in certain bite-sized chunks and make it more practical, because the opposite is you can spend a lot of time and money and not get the result that you want, because this isn't a one-off, right? This is a way of doing business. And as Tiana said, it also speaks to the culture of your firm, which culture is something the regulator will look at.
Yes.
When they come in. You got the technical things we're talking about here, but it's like, well, how did this happen? Why did it happen? What sort of questions do you ask of your staff, and those sorts of cultural things, which are the softer side, and your provider you really want them to understand that.
Yeah, no, absolutely. And culture is making its way into the guidance a lot more in terms of AML CFT. So while the Act and the regulations directly don't talk about culture and assessing that, certainly the guidance note, particularly coming out of RBNZ and FMA, is that very much culture is part of what the supervisor is looking at, testing as part of their own sites, and certainly audit is moving to that space as well. Okay, so while 10 years ago we weren't testing that sort of space and commenting on culture as part of audits, we certainly aren't these days. And it's really very much to reflect supervisory expectation in that space about compliance maturity, really setting that tone and really embracing AML at a board level and at a tone. So everything that Nigel talked about is really bringing in some of those key skill sets and being able to evidence that to any external provider as well. There is certainly a benefit in being able to test this regime on a regular basis, and that alludes back to the first question that I said we'll talk about later on, which is how do you know that this hasn't gone well? And while it's great to be told by your auditor, it's not so great to be told by a supervisor. It's best to know way before that. Okay, so Nigel talked about how challenging remediation is for AML CFT. Being told by your auditor 3 years down the line that you've missed the interactions of onboarding your clients, really tough to remediate. Okay, there's hindsight remediation that's typically expected by the supervisors, and the time pressure on that and the volume that can be associated with 3 years worth of transactions and clients is absolutely enormous. So having an internal or otherwise external, if you require it, process for identifying non-compliance is fundamental to your success with AML CFT. Okay. And I won't go through the details of what is a great regime for internal or external compliance, but it is a technical skill set, right? It's knowing what to test, how to test it, to identify the problem areas, and it's a risk-based approach as well, really knowing where things could fall apart. Okay, and it's also having a really clear plan about what do we do when we find something, or we're told by an external provider they've found something well before the audit. How do we escalate these findings? What are the remediation processes? How are we going to train and make sure this doesn't happen again? And what is the process of going sure that we sort of stay on the right path going forward? Okay. And there's certainly benefits to having an internal audit team, using external providers as well, or just having someone in the organization who is somewhat independent and able to look at this from a really expert perspective and provide some insight on a regular basis.
So, Nigel, maybe you can give us some perspective on this here. What are you looking for when it comes to an assurance review? What sort of questions are you asking as a result of the review?
Yeah, like you want your review to be open and honest, right? So I'm just like, give it to me straight. I don't want anything sugar-coated. I don't want anything massaged. What is it? And then, what's the risk that we're running here, right? And then you're sort of into remediation, and then you're into things like resourcing. Have we got the right resources inside the firm? Have we got the right people? This issue, that whatever it is that we're dealing with, or the shortcomings in the finding, how do we ensure that we're not going to be here again? And how long is this going to take? And then you very quickly get into, okay, so how do we deal with the supervisor, right? And this concept in audit, which some people may not be familiar with, but is around self-disclosure. And that is your self-reporting. So you might find something in your business. Now, because the supervisor is unaware of it, doesn't mean that you can ignore it and put it in the bottom drawer. And there was a case some time ago in Australia out of Macquarie Private Wealth, where they did have some adverse findings, and the report was kind of literally put into the bottom drawer. And then eventually it came out. And so then the regulators stepped in and did enforceable undertakings on that business, which means that they're in your business and they're saying you need to do this, this, and this. And that's a very difficult place to be in a long time. So you just don't want to be there. So if you become aware of something, just deal with it and accept the fact that the world's not perfect, and there will be processes and things where you do have shortcomings on, and just get on and fix them. And like I say, if you said to the supervisor, we found this is what we're doing about it, you'll get a lot more latitude than if they find it on your behalf.
I definitely agree. And we've certainly worked with a number of clients to try and create those escalation procedures of when do we sort of self-disclose, how do we manage that, how do we risk evaluate an issue we've identified, is it managed in-house, do we need additional resources, and so forth. So it's really great having a plan in front of you to know how to deal with those crises as they come up. Just being mindful of time, do we maybe want to answer some of the questions that have come through, or would you like me to carry on, Sean?
Let's have a couple of questions. We have one in from Jeff. He says, all types of audits have their limitations and are employed in various ways. How does the board get appropriate, sufficient assurance given that management are directly involved in all elements of sourcing, engagement, and reporting? What involvement does the board need to have?
Yeah, look, that's a really good question, right? And that literally comes down to the scope. So for me as a board member, I wouldn't delegate any overall responsibility for engaging a AML provider to, you just go away and work it out, do a report and let us know. It'll be, we need to be doing this. I want you with management to work out what the scope is, and you bring the scope back to the board for approval, right? Because you need to have that oversight. And as I said, directors are, we're all responsible. So getting the scope is really important, because that's what your provider is going to work to. That's their roadmap. Mm-hmm. If you excluded certain things from it, the auditor might go, hey, you really should have a look at this or not. But you can't rely on that because they're working to the scope.
Yeah. And
so
really, I was going to say another perspective, I think you'd really want to be looking at the integrity of your auditor as well. If your auditor is quite happy to reduce costs by simply not testing challenging areas like transaction monitoring, for example, or reducing their sample size, as an auditor, our obligation is to give you a report where we can actually stand behind that opinion and say, actually, we've done enough work to really give you some comfort around where you sit. So having an auditor that sort of backs their methodology, backs adhering to their scope and their pricing and their time on site is also a really good indicator that you'll be getting something you can place actual reliance on rather than ticking a box. Because ultimately, ticking a box is not going to be what you're going to want, should you be facing any supervisory action or otherwise. You'd rather know and have a really good perspective of where things are at. And that requires time and some expertise.
Yeah, and look, if that scope, which it should do, including, ongoing work, as a board, you want to understand, what are the SLAs, what are the KPIs, what's the reporting that we're going to get, what are the deadlines, what's our, points for if there's a problem between the audit provider and management, escalation points and things like that. So it certainly can't just set it, forget, oh, yeah, we've got this in place, now we'll leave it sort of ticking away over to the side. You've got to be a bit more active oversight than that.
We have another question in.
I'll just add one more thing there, sorry, Sean, before the question goes in. So one of the things I find fascinating is like the FIU publish a report every quarter, and like last year, calendar year, there were 17,000 SARs submitted to the FIU here in New Zealand. Now, that is the key thing that the legislation is about submitting to suspicious activities that are out there. So as a board, if you're not receiving any suspicious activities through on a regular basis, I just think that there's a lack of training involved in your frontline staff. As Tiana talked about before, to not identify dirty money literally buried in the ground. I mean, it's going to be, it's not just one person looking at it, there's multiple people that have to view this money. So a suspicious activity should be raised at a certain point. And there are hundreds of suspicious activities, all down to different segments of and sectors. So it's different for financial services compared to say real estate and accounting and so on and so forth. So the education piece is becoming far more important for the supervisor now. They're focusing on the red flags and how can your staff identify that. So going back to that point, if you're not getting any SARs coming through throughout the year, and it's actually quite telling, of all the SARs being submitted, there are very few coming through from lawyers, accountants, and real estate agents compared to financial services, who have been in the regime for a lot longer, of course, but they've also got a layer of transaction and account monitoring over, which does pick up a lot of suspicions in the end. So yeah, I'd be focusing a lot on those suspicious activities.
Okay, so we have one other question from Radha. I think that's how I pronounce the name. Organizations have different risk profiles. Does the DIA have a risk framework to help a business assess if AML CFT is one of their higher risks?
Yeah, no, they do. So each of the supervisors have issued a sector risk assessment, and the DIA, one of the three supervisors, has the most sectors that they manage. So everyone from casinos to real estate agents, finance companies, etc., are all under DIA. So what they've done is create a sector risk assessment, and it is targeted for particular types of reporting entities. So finance companies, for example, will have their own sector risk assessment, which will assess each of their key risks under each of the attributes of like customers, products, etc., and what that risk profile looks like. And naturally, some entities that they monitor, like money remittance and casinos, will be high risk, and they will really require a program that's robust and very detailed, versus someone who is, for example, like a finance company, which is sort of the lower to medium risk category, which will, while still required to have all the key obligations met, the risk is lower. Naturally, the amount of controls and procedures needed in that space are going to be lower as well. Okay, so they certainly do produce really, really great risk assessment guidelines, sector risk assessment guidelines, which then should inform your risk assessment internally. But within that range of finance companies, for example, there'll be ones that are naturally higher risk than others as well.
Thanks, Tiana. Brilliant. Okay, so just to wrap up, you'll receive an email from us fairly shortly. It'll be later on this afternoon, which will include a video of today's webinar, along with the slides that we've taken you through. So just as you leave the webinar, don't forget to complete our really short survey. Go in the draw to win our hamper. We'll announce the winner on Monday morning. So thanks again for your attendance, everybody. I hope you enjoyed the session today. There were some great questions. Thanks again, Tiana, Daniel, and Nigel for your contribution today.
Thank you.
Thanks.
Look forward to seeing you all at our next webinar, everybody. Have a great day.